Hello investors, traders, and Market Club members everywhere. Adam Hewison here with your market report for Thursday, the 17th of October. Well, late last night, the United States averted what could have been a disaster for the country, and I happened to be there. I was on CNBC Asia last night when the actual vote came in. You can watch that clip right here on our blog. So what we've done in essence is just kick the can down the road. We've diverted a disaster du jour, and we've put it off to January 15th. But I think the market's going to be strong until that period. So let's take a look at the stocks that we've been talking about. And let's start with Apple. We've been very bullish on Apple, as you well know. And we have our trade triangles. I put those in. We got our weekly and monthly trade triangles. You can see there's our weekly came in on the 14th, just 3 days ago, at 496.91. That's worked out very well for us so far. But there's a big thing coming up, a big time period you want to look at. Look at price point. And the price point we're looking at on Apple is right here. And I'll give it to you. The number tomorrow to watch. If Apple closes over 502.27, that's going to be a new high close for a week for the entire year. Watch that carefully, very, very carefully. If it closes at about 502.27, currently trading at 503.92, so it's over that level now. But if it closes at or over 502.27, that's a new high close for the year. Get long. We're going to go higher to the target zone we have on Apple is 550 to 560, and this is a very large base it's been coming from, so it could go actually a lot higher. So let's watch it very carefully. So moving on to our next market, and that's Netflix. Now Netflix, much the same, it's acting very, very well. It had a big drop with this is the problem we have with the close down of the government. We came back very, very well. Now the key level to watch on this stock is tomorrow is going to be a close over the 327.22 level. Let me write that down. 322.27. If we close over this level on Friday, get long. That'll be a new high close for Netflix on a Friday going into the weekend. I think it would look very, very positive. We're still looking for this stock to go to 350, 360. Let's see what it plays out at. Facebook is the next market. As you can see, we're actually doing very well on Facebook today. It's up over 0.5% almost. So we're trading at 551.37. And if we see a close there over 51.20, and we're currently trading over that level right now, on a Friday, it'll be a new high Friday close. And that looks very, very positive for this stock. We're looking for Facebook to trade between $70 and $80 a share. You've got tons and tons of people using Facebook. The trend is your friend. All of our trade triangles are plus 100, means the trend is very strong. Expect that trend to continue on upward. Moving along to crude oil. Crude oil is still in a negative camp. Longer term, it still looks positive, but right now we're twiddling down here towards the $100 a barrel level. Closes under $100 would psychologically not be good. Longer term, it's still positive, but for the most part, the intermediate and the short term is negative. So moving along to gold. Gold has really tried to getting going on the upside, a big, big up move today. And if we look at this on a weekly chart, which is what we frequently want to do, you really have we're going to be closing higher in the opening the previous week, which is still a very positive sign. So watch this very, very carefully. We've been saying for some time that we think gold is trying to form a base. And if we just look at the last signal we had, the monthly was at 1672. We're currently trading at 1315, substantially lower, but it's trying to build a base. I think for the most part we may have seen part of that base being put in place. So let's watch that very, very carefully, especially in 2014. Now on the euro dollar, again, the dollar is not doing well. I think Janet Yellen, who's coming in as the new Fed chairperson in January, has got a ton of problems on our hand, one of which is going to be the dollar. But you can see how the market's beginning to creep up. If we just put a line chart on here, and we'll just draw a trend line, a very simple trend line from the highs, pull it down, you can see really we're getting close to that. I'd like to see 3 points, but we only have 2 here at the moment. But certainly that's going to be an area of resistance. But we're looking at 140 as the next target zone on this is the least bullish of the indexes right now. The Dow Jones, it looks like old school, old markets. Let's take a look at the markets that are really doing well. And you have to look at the NASDAQ, which is a new high. There's a new high for the move. That looks very, very good. Propelled by the tech stocks, obviously Facebook, Apple, Netflix, you name it, they're all looking very, very good this morning. So moving on to the S&P 500, pretty much the same pattern there. If we see this market, if we look at this on a weekly close, and that's the important thing to look at, how people are going home over the weekend, this is going to be, if we close at these levels at 1720, this is going to be a new high weekly close for this index. You can just put a close only chart on, you can see how it's moving up, and that looks like we can go higher, certainly to the 1800 level. So let's see what happens on that, and not to forget the Russell 2000, and that also looks very, very positive to us on the upside. There's a new high there, looks very, very good. We had a new weekly buy, came in there, and that's already in the profitable zone. So let's see how that plays out, but generally speaking, we're expecting the stocks to move higher till the end of the year, and then next year is a totally different picture. I'm Adam Hewison. If I'm traveling tomorrow, I won't be here, so we have a special blog posting for you, so be sure to check out our blog tomorrow. Have a great weekend, everyone.
You can find Adam Hewison as a regular contributor on Bloomberg, Business News Network, CNBC, and Fox Business News.